everyone, and welcome to Smart Money Results. We've got an amazing guest today, a person I'm sure you all want to hear from. He's Craig Cobb, founder of cryptocurrency investing resource TraderCobb.com. Having decided to become a trader at the young age of 16, Mr. Cobb has been mentored under some of the brightest minds in the business. Today, he's sharing the wealth, educating investors from all over the world on the proper discipline of trading. Mr. Cobb, thank you so much for joining us at Smart Money Results.
Mate, it's been a pleasure. Thanks for having me.
So recently, we've seen serious geopolitical developments in the U.S.-China trade war, along with the Federal Reserve deciding to cut benchmark interest rates, which is a first since the Great Recession. And logically, this has benefited precious metals, which have responded well to the so-called fear trade. But Bitcoin and other cryptos have been all over the map since these news items broke, and especially over the past 3 months, they've sort of been trading in a sideways consolidation pattern. Could you tell us why blockchain assets have failed to give us a clear directional move?
Yeah, man, there's a whole bunch of factors coming into it. I mean, a market's a market, right? There's different factors that drive all of them, as you quite rightly said about precious metals, with talks of the trade wars in China and whatnot that's going back and forth between America and the Chinese. Look, with cryptocurrency and blockchain, I mean, blockchain's a technology. Cryptocurrency, it's basically a computer currency, if that's the right way of putting it, a digital currency. Look, they do their own things. There's a lot of things in the space that will affect small tokens. So we call them small cap coins, just the same as a penny stock, for example.
Right.
And they can be moved a lot by a little bit of good news because they're relatively illiquid and they can go nuts. When we talk about something like Bitcoin, it seems to have a bit of a mind of its own. A lot of people seem to have a theory that if traditional markets were to fall, then Bitcoin would go up. Now, as much as that may be a trickle into Bitcoin, who knows? As we know, bonds and often into the precious metals is where the money goes, and of course that's where we've seen those moves because people have fled from equities into these more traditional store of value type asset classes. I can't remember your turn of phrase, but the safer place to put it, or whatever it was, the scared money jumps into there.
Right.
But I mean, look, Bitcoin it works with its own cycles. What we will see in, say, what used to be a traditional sort of 7 to 8 year cycle in stocks, we'll see that once or twice a year in Bitcoin. So it's a great market with huge volatility, and that's why I love it.
I know that you focus a lot in your business with technical indicators. You specifically mentioned a lot about volume levels, and I was just wondering. So, with assets like gold, when interest rates, interest rates is a big catalyst for gold. The monetary policy, all of that good stuff are major catalysts for gold. And so when the Federal Reserve did their whole shenanigans, it was basically saying go to gold or go to silver because they're going to rise. Does Bitcoin and other major cryptocurrencies, do they have these overriding fundamental catalysts that if this happens, then for sure Bitcoin and the cryptos would rise higher?
Not quite as interlinked as what it may be as in obvious for like with gold and interest rates and trials and tribulations in various economies, right? Not as much as gold. Like gold,
Sure.
It's a really tried and tested path. It's a very well known, safer haven, shall I say, and it's a tried and tested path, right? With cryptocurrency, what we'll tend to see is we'll look at the Bitcoin dominance. So there's the ability to look at the size of the market, which is I think nearly 280 billion or something like that at the moment, entire market capitalization of the entire space. And you look at it and, when we start to see Bitcoin nudging up, we'll start to see the percentage of that overall market capitalization being held by Bitcoin. Now, as we start to see that, as it starts to creep up, naturally it's creeping up because either more money's coming into the space, or what we'll often see is a lot of people leaving other projects to go back into Bitcoin. And we'll see Bitcoin, like for example, this year, Bitcoin has been the dominant force. Litecoin's had a very large year as well, but Bitcoin has been dominant. It's had a really fantastic year from the lows, to the highs. It was up 340 odd %. And now we're sitting somewhere in the vicinity of 280 or something like that. So we do see people, when there's a bit of fear out there, moving into Bitcoin as if anything's going to survive, when worst comes to worst, it's going to be the first mover advantage. And so far that remains to be Bitcoin, and it still has the biggest digital asset value and safer money, if you will, in this extraordinarily volatile space. It's digital gold in our eyes.
I see. And just to follow up on what you said, so when Bitcoin obviously right now at $10,000, that's a very a key psychological level, and a lot of folks, they just many people just don't have $10,000 to buy that one unit of Bitcoin. I think psychologically we're trained to desire unit-based ownership. To say, hey, I own 0.003 Bitcoins, and it's psychologically we're not geared that way. We prefer these whole units, and I was wondering, so Bitcoin being the leading cryptocurrency, do you anticipate that changing because the other major cryptocurrencies have the psychological advantage of being more affordable on a per unit basis?
Look, if anyone's thinking along those lines, I think it's flawed judgment.
Sure.
I mean, coming down to your sort of round number sort of figures, as you were suggesting about Bitcoin at 10,000, and buying one Apple share, or having one of this or one of that, or 10 of this or 1,000 of that. Now, you bring that up very, very at a very good point a very good time, because what is one measure of gold? Well, the measure of gold is in ounces, but there's also another measure which is in kilograms, and there's in tons. Now, I'd love to have a ton of gold, but you know what I mean. Like I think that there's two things. One, people just need to accept the facts, accept that the world is changing. You go back 120 years, we didn't have motor cars. You go back 40 years, we didn't have computers like this. I mean, the very concept of us doing this right now, talking to each other from another part of the world, was science fiction. People need to understand that change does occur, and those that are able to get ahead of that change, understand that change, and take advantage of being Johnny on the spot at the right time, and not just wave it away like it's some silly little idea. They're the ones that are going to be very successful. They're the ones that are going to they'll have some wins, they'll have some failures. I mean, that's just the way the world works. You can't win every time. You have winning trades, you have losing trades. But that incremental step up, being able to not have to buy a whole Bitcoin, it's a massive advantage. It's a massive, massive advantage for us. There's only 21 million Bitcoins in existence, and we're up to, we've got another number of years left still to mine them. Bitcoin will, in my view, as it stands right now with the current present day information that we have and the ability to have a bit of foresight, I believe it will continue to be the leading digital asset for the time being. Now, it doesn't matter about how you can spend it, because you can spend it. I've spoken with Peter Schiff, for example, and he just shuts his eyes and ears and just will not listen to anything. He's made a career out of basically, just having no idea, really. His argument to me was, well, I can go and buy things with gold. I'm like, no, you can't. You can't.
Yeah.
You walk into the store and you go, here's an ounce of gold. Can you just carve a little bit off,
right,
and I'll have the rest back? It doesn't work that way. It is a value asset. The whole reason gold has a value is because we put a value on it, and that's why it retains that value. Now, Bitcoin's exactly the same. It's money that appreciates, but if we don't want to spend it, it just becomes another digital gold. And in the digital revolution, in a digital age where less is more, think about our phones, they're getting smaller. Think about our earbuds, they're getting smaller. Our computers are getting smaller. Everything is getting smaller. So why do we want to walk around with a wheelbarrow full of gold?
That is an excellent point, and you throughout that talking point, you mentioned the theme of change, that we have changed from let's call it an analog society to an increasingly
digital.
a society of digitalization. And that was actually one of my arguments in a story I wrote for investorplace.com. I mentioned that a paradigm shift in terms of cryptocurrencies is that these assets trade 24/7, 365. Yep. They don't care about weekends or holidays because these are arbitrary, artificial concoctions. And I think that, especially when you look at, right now, obviously Wall Street dominates the investment discourse. But even as an American, I'm on the West Coast. I have to wake up 3 hours earlier than normal just to be able to trade. And when it's 4 p.m. Eastern, when the markets close, it's 1 p.m. for me on the West Coast. Yep. That's like my lunchtime. If I don't make my trade, I'm basically screwed.
Yep.
But I was wondering, because you're in the business of trading, yep. do you find that this 24/7, 365 dynamic is more of an advantage or disadvantage? Or could you share, maybe juxtapose your experience trading traditional assets versus these cryptocurrencies that trade all the time?
Yeah, I mean, first and foremost, on the 365 days a year and 24 hours a day, you got to look at a couple of the people that are going to play. All right, who are going to play in this market? Well, one of the biggest demographics one of the biggest demographics in the world is the millennials. These are the boys and girls that have been brought up by the baby boomer generation.
Sure.
Now, millennials are there. We didn't get the .com. We didn't get to buy all the property up. That's what our parents did. Everything. They sort of created this new society. Now, what we want to do is we want to buy a house. We want to live nice. We want to do what they did. But it's getting so much harder to do that for many, many people. Mm-hmm. You look at education fees are higher, but the pay is lower. It's harder to get these jobs because there's a lot of digitization going on, a lot of automation. So there's more people fighting and vying for less positions, and it's becoming much, much, much more difficult. So to give that demographic, which is our biggest voter demographic, our biggest group of world changers right now, give them what they want. Well, it's hard to make it big at the moment. It's hard to even make ends meet for a lot of people. 24-hour a day, 365 days a year means they can work their job. They can also come home. They can trade crypto or invest in crypto when they like because they've got that time. Now, flip the script on that. And let's talk about some hedge fund managers. A hedge fund manager is a hedged fund, okay? It's obviously going to be net one direction, whichever way they are, and however they play their fund, but they need to be hedged against a market. They need to make sure that if any black swan events were to occur, then they have themselves in a position where it can be relatively well balanced. Now, all these markets are going to close over the weekend. So you always carry weekend risk. If all of a sudden Iran gets nuked or the missiles start falling from the sky, well, what's going to happen? Well, the price of oil is going to go nuts. Now, you are not going to see that as a smoothly traded through market. It's just going to gap. And you're going to have to eat that biscuit when you get into work on Monday, and it's going to hurt. So there's the added benefit for a hedge fund manager is not that they've got to stand there and work 7 days a week. No, they'll have somebody to do that for them. It creates more employment opportunity. It creates better hedging opportunities. It creates the ability for everybody to have a go. That's not, if you want to trade the S&P and you live in America, well, then you bloody well better be sitting there full-time trading because you got to work those hours. So it's much more accessible. You can start with less. The volatility is insane. So just to come back when you said about traditional markets, I lived in London for 6 years when I was, working with my mentors and basically becoming a trader, yeah. And we used to trade the ES, the YM, the TF, and the NQ on the bell. Same thing as you were talking about before. On the open, couple of hours, and then after lunch, we'd traded there too. And I enjoyed it. I really did. But the volatility in traditional equities, in foreign exchange, in bonds, commodities, equities, it's just not there. If I talk to trader, you've got your risk multiple, right? Let's say that risk multiple is $5,000. Now, if I'm going to get that if I'm going to make 3 to 1 out of that, that's 15,000. right?
Right.
Now I might get that in a few days on a equity trade or something, or a few weeks. In in Bitcoin and cryptocurrency, I'm literally getting 40 to ones. One of my apprentices, 98 to 1 return. So that's that 5,000. That's nearly $500,000 in that sort of move. So if you're a trader, you want to be in this market because you can be pretty average, have a bad win-loss ratio, but the reward to risk ratio is so phenomenal that it makes do for everything else. So yeah, it's a great market.
Just going along those lines. About time zones. I was just, this is just for my own personal curiosity, and I'm sure
Sure.
some of the audience members may be curious about this. But do you notice? So right now it's almost 8 p.m. on the west coast of the United States, and so obviously here, there a lot of people have already come back from work, may have already finished their dinner, may be ready to do some trading. And I was wondering, do you notice that blocks of activity in certain time zones when people are more likely to be at home, or versus when they're at work, or is there any kind of, have you ever noticed any kind of patterns?
There are sometimes. The first one is the weekend can often slow down. So it does tend to have it can creep along a lot slower. No, that's not an exclusive rule.
Sure.
It can creep on a weekend. What I have noticed is it's very similar to foreign exchange. Obviously, foreign exchange is about as close to a 24-hour market. It's 24 hours, 5.5, right? That's the way the foreign exchange world works. It just rolls on, rolls on. So with crypto, yes, we do see a lot when the Asian market starts to come to waking up. So I'm here in Bondi Beach, Sydney, Australia. And when I get into the morning, I typically see the end of the sort of East Coast trading,
Yes.
and also the European sessions. And then there'll be a period where it might be quiet until about 10 o'clock, which is great because that's when one of my candles closes. At 10 o'clock, the candle closes. We see the volume coming in from the Asian markets. And then we just roll on again. But there's nothing like there's nothing quite as significant as, like, the ringing of a bell. That obviously it's a significant event. There's a lot of people waiting for that. It's more like foreign exchange where it flows. It doesn't always work that way, but you can notice spikes in volatility and volumes around certain times.
I wanted to switch gears a little bit. During your interview with Crush the Streets, Kenneth Amaduri, you had mentioned some concerns about bad actors in the crypto space, and I'm totally in agreement with you in terms of for one thing, there's there's a lot of well, if I may say, bullshit in
Yeah.
in the crypto space. Specifically, there's a lot of folks that are pumping
Mm.
so-called trading systems that I believe there's a big risk factor, at least from what I see personally, is people are conflating fortune with skill or with experience. Yes, there's been a lot of people that have made millions and millions of dollars and are driving Lambos. But is that more fortune, or is that more luck, or is that more to skill? And I know you mentioned on your website that I think you said you blew up your account 3 times before you realized how to navigate the pitfalls, which makes your service much more unique than or distinct than the bad actors, which they don't really have that provenance to prove whether their system works in both bull and bear markets.
Mm.
I was wondering, do you think that this distributed BS is maybe at least partially responsible for some of the strange price action that we sometimes see in the crypto space?
Yeah, I mean, absolutely. Look, markets are manipulated. I'd be a fool to consider them not to be.
Right.
And when I say markets, I mean markets in general. They all are. I mean, look at what happened with the LIBOR rate recently. Look at what's going on with HSBC, Deutsche Bank. Like, look at all this sort of stuff that's happening in plain sight. This shit happens. It's part of, unfortunately, a financial system. And when it's a financial system, there will be greed, and people will try and take shortcuts. I do the way that I trade though. It's to avoid having to give a care about these things. And the reason I can do that is that I'm only looking for smooth, clean, trending charts. I need to be able to see what I call optimal chart structure. An optimal chart structure just gives me a trend or a chart that is just it's doing the right things. It's predictable and it's following along to my three strategies, which are checklist based. So they're literally you just check boxes to pick out which ones you want.
Sure.
So the difference, I think, with a lot of these bad actors, I mean, yes, there are people out there that are doing pump and dump groups. I find it repulsive. I'm really, really against it because it's taking good people, naive people, and hurting them for the gain of somebody else. And for me personally, I just you can do really, really well without upsetting other people. You don't need to rip people off to make money. It's the most terrible thing you could probably do. They're there, of course they're there. I think the difference between and even the trading educators in the space is I've been trading for 13 years. I've worked with ICE, I've worked with New York Stock Exchange, Owanda, CMC, Malik. I've worked with some of the biggest names in trading. I do this because I love it. I'm good at it. It's taken me a long time to get good at it. For the last 9 years, I've been a full-time trader, I can make money when the market goes up or down. Why can't others do that? Because they just don't understand what the market's going to offer them. They just don't know what they're doing. And look, that's fine. These people that have made their money in crypto, absolutely they're lucky, mate. Absolutely fluked it for a lot of them. And
Sure.
I think that's fantastic. If that was me, I'd be cheering myself on too, but I've had to work bloody hard for what I've got.
Yeah.
It's okay to be lucky. I just think that people need to come into this space being aware of you're still looking for the same sorts of things as you would in traditional markets, but you're going to look at it in this market. You might have to sift through a lot more bullshit, but there is some gems in there that does exist.
I wanted to quickly follow up about you had mentioned the optimal chart structure, and without giving anything proprietary away, I was wondering, is this okay? So here's some problems that I personally have run into. I'm a student of longtime student of the traditional technical analysis and analyzing chart patterns. And I've seen many chart patterns that would seemingly suggest that there would be a upward movement, and then, and excuse the term, but there will be some nerd shit that happens that is like some obscure news item about warring parties about which cryptocurrency is best or whatever. It's just some very esoteric stuff would just tank the price action just completely. Yep. And I was wondering, with your charting system, have you figured out a way to sort of, I guess, with greater probability forecast some of these unusual dynamics?
Oh, look, yes and no. I mean, if you're going to trade a market that's illiquid, then you're going to be, you're going to cop a lot more slippage, and you're going to be in positions where you might not be able to get out of it. It's going to hurt you substantially. I don't mind having losing trades. I couldn't care less. It's a part of being a trader. So I like the trade. Like, part of the optimal chart structure is to be trading with markets that have that high liquidity, that have the ability to take you out where you need to get out. So that if somebody does open their mouth and say something, or something happens, whatever, then my stop loss gets triggered and I get out at the price that I want. So just the same as if somebody came out and spoke about a company on the S&P today. I don't know as a trader that it's going to be happening, but when it does happen, it's going to have an effect that either sends it higher or lower. Now, let's just say something massive happens and happens lower. Is there any way for me to plan for that? The only way I can plan for that is by managing my risk. And the best way to manage your risk is to trade liquid markets with stop losses that allows you to get filled. I really can't plan for what other people say and do. What I can plan for is to manage my own risk and to set myself up that when, not if, but when these things occur, that I'm in the right markets and I don't suffer too much of a risk additional to what I was willing to take.
My last question, this goes back to the point that you made about the millennial demographic. So back in late 2017 to early 2018, we saw Bitcoin and the cryptocurrencies collapse, and that's when the mainstream media started harping on the idea that this is just a Ponzi scheme, tulip bubble mania 2.0, whatever. And I'm sure you've heard or read all the criticisms, and now Bitcoin has decisively crossed that psychological barrier of $10,000. And we did see, I think a few months back, Bitcoin head, I think, toward $14,000 before it collapsed again, and it engaged in this sort of like a sideways trading around the $10,000, $11,000 level. And in my thinking process, I thought that once Bitcoin crossed that $10,000 barrier, that was the psychological point where the mainstream would finally say, yes, this is not a Ponzi scheme or what have you. This is the real deal. And yet, for months, we're seeing this sideways action. I was wondering, in your opinion, when do you think this millennial demographic tailwind will finally jump on board to start to see the return to the all-time highs of 20,000 and hopefully beyond that?
Well, the good thing is to get to 20,000 from where we are now, it's only going to do 100%, right? That's all it's got to do, 100%. Right. It's got to double from 10,000 to 20,000. Now, that might sound ridiculous for me to say so flippantly, sure, so off the cuff, so casually. It's just got to do 100%. But you've got to remember that we've already started the year with over 350 or about 350% to the 14,000 high. It's a big move. This market goes nuts when it goes. The catalyst for further growth to all-time highs, I don't think there'll need to be all that much, to be fair. We seem to have a bit of a snowball effect at the moment with lots of things, lots more positivity, lots more growth, lots more real reasons for people to adopt it and use it. I think the biggest growth we're going to see of the industry, not just of Bitcoin, but of the industry, is going to be when we see some of these apps, these dApps, start to hit the market, give people the ease of access to be paying with things with their phone everywhere they go. Things like different technologies, being able to keep our data safe, keeping our records to ourselves, not being able to get hacked as easily for our information. I think that's years down the track. It'll start to trickle in, but it's like a snowball effect. We saw the 1996 boom, we saw the 2000 boom. Well, the 2000 boom of the .com was a hell of a lot bigger than the 1996 boom. Obviously, a lot of casualties were had there as well. But don't forget about Amazon. Don't forget about Google. These are the biggest players in the world right now, the biggest market capitalization of any company on the planet. They're in the top 10 frequently, and you got eBay in there as well, yeah, also in the mix. So this is what we're going to see occur again. Now, that was 19 years ago. Don't forget that. That was 19 years ago. It takes time, but our time is now. This is still early. The technology is still early. It's still being understood. And whilst other people keep on calling it a fraud, a scam, a Ponzi, that's where our opportunity lies. And if you're a trader and you're not trading this market, you're nuts, because it's the most volatile market in the world. I'm talking straight to you traders, because you manage your risk. You know this, guys. You manage the risk. We can't control the reward. The reward in this space is so astronomical that you have to be here. You just have to be here. Even if you just trade Bitcoin, we've got margin products. We've got stop losses in. It's not as nice as trading some of the other platforms. It is still a bit clunky. I'll give you that. I'll be honest with you there. But we make up for it in spades in the volatility, guys. Get in this market.
Yeah, absolutely. I definitely agree on that. Well, this has been a fascinating discussion, and I genuinely want to keep it going because Bitcoin is just one of my favorite topics. Unfortunately, we're just out of time, but before we shut things down, could you share with us where people can learn more about your work?
Yeah, pretty simple, mate. Thanks for that. Just go to tradercobb.com. It's COBB for Bravo, tradercobb.com. Look, there you've got free courses. You've got lots of video content. There's a bi-weekly video newsletter you can get on. Free. If you want to go on courses, check it out. Do what you will. On Facebook, get me Trader Cobb. Same on Twitter and same on YouTube, just Trader Cobb. So, yeah, thank you.
Mr. Cobb, thank you for sharing your insights with us at Smart Money Results.
It's been an absolute pleasure. Hope you've enjoyed it. See you guys.